Hi, this is Carson Block of Zer0es TV, and I'm very pleased today to have as our guest Dr. Pascal Ströing. Dr. Ströing is the founder and owner of a company called MetaShort. And MetaShort is of particular interest to me because it's an independent firm that critiques activist short reports on behalf of its clients. Pascal, welcome, and thank you very much for doing this.
Thank you for having me.
So the first thing I want to get into is an understanding of how your business works. Like, what type of investor or firms come to you to critique activist short reports, and how does that process work?
The general idea behind it is, like, especially on the beer side, there are big struggles to do the due diligence because the important information, some of it is in the short reports, some of it is in the media by journalists. Some of it is much more hidden somewhere in the internet. Some of it comes from whistleblowers. And to really do a proper due diligence as an investor, or also from the legal side, if you have a case in front of you, you would have to dig through, in many cases, hundreds of sources. And what I try to do is just compiling them in a very concise manner, in a very readable manner, maybe similar to what banking analysts try when they dig into an equity and publish a recommendation about an equity. But I feel there's, or not I feel, but I'm pretty certain there is an issue with incentives on the side of many of these reports. I think that you cannot do good due diligence, and we have seen this repeatedly in many cases of big frauds, from incidents in 2008 with Lehman Brothers, earlier Enron, quite recently Wirecard in Germany. It's kind of the analysts probably miss a spot here and there, and it's often a very important spot. And I try to make it readable and also evaluate the short reports with this. So when I write my reports, I base what I write, or I quote the short reports often, and many times it's like you find something very well-founded, very good research in short reports, but sometimes also there are just overemphasized allegations that should not be made like that. Yeah.
To make sure I understand correctly, your process, one of the first things you'll do if you're engaged to look at a given short report is you'll look at the sources that the short report cites, to evaluate whether those sources are supportive of the statements in the short reports?
Yes, but I wouldn't say this is the most crucial point. I don't think it happens very often that there are lies in the short report when it comes to the evidence. I mean, yes, yeah, there are lies, but they are not fabricated evidence. I don't think that's happened very often. But what happens very often is an allegation like this company would go bankrupt, or this company had fake cash accounts, and there is no further evidence on this given in the short report. And that's, of course, not very good and very fair. And what I find surprising often, might be other points that are very important in the short report and good research. So I sometimes wonder, why is it that you have to add some extra allegation, right? You can fairly say this stock is highly overvalued in the market without making allegations that go too far and say this company has to be bankrupt.
Yeah, look, I mean, those are, that's a fair criticism. And I don't read a lot of other short reports or short activist reports, but when I have, I mean, yeah, I've felt like there's a range of reasonableness, especially in the US. It's important that we distinguish, in the EU too, you distinguish between statements of opinion and statements of fact. So I think normally, if you're concluding that, if you're stating that you think the business is going to go bankrupt or that there's fake cash, those are really, I would think, de facto statements of opinion, but they really need to be reasonable and drawn from the facts that you present. How big a problem is this, do you think, where you have these big, bold pronouncements of opinions, but you don't see the facts that would really support those opinions?
I think it's more an issue of rhetoric and how you present it, and this is what I try to address with MetaShort. If you are not used to the business of short selling and have these kind of reports in front of you all the time, it's hard to read those. And I see this very much reflected, especially in the German media, where there is a lot of fallout from Wirecard, right? This was a very big story in Germany, not only because the company was decently sized, or for German standards, it had a big size, but also it was kind of a story of a tech startup being a young company, and the German industry is particularly old. They have a lot of competitive companies that are old, and there's also a lot of criticism about do we have to refresh our industry in this sense? What I see in the media, even in media that is well funded and should have the abilities and the resources to put some proper time into their reporting, they are not capable to see through the record that you say. When I say we believe in a short report, it says we believe these accounts are made up and there's actually not this cash of, let's say, $1 billion. Is it like a 20% degree of belief, or is it like a 90% degree of belief? And most people who read this kind of reports and are not used to it would assume it's like a 90+% degree of belief. Then if someone writes in a management summary, we believe that, blah, blah, blah. In reality, it can sometimes be probably less than 50% or something. And it's a whole other issue, but it's also very important that in short reports, many of the allegations rest on an analysis of non-financial technology. For example, what is the product? You see this a lot in these pharmaceutical cases, in engineering cases. Usually the short seller relies on expert judgment by some of his whistleblowers or consultants or whatever. And there also sometimes goes something wrong. I mean, it can happen that there is you just have the wrong consultant on the engineering part, and then that's a very crucial and important point. Yeah, and maybe it's also important that everybody knows that even inside science and inside engineering, there is a lot of debate, even among the top experts, if something can work out or not. Right? It's not always so as clear as Zer0es, but that's the reason why something like Zer0es happens. Is like even the best experts can be wrong. Right.
Right. Well, my approach to those situations that you're talking about where there's a technology that's really at issue, I've always said, hey, we could trot out our scientist who says this doesn't work, and the company will trot out its scientist, which would say it does work, and the shareholders are always going to believe the company's scientist because they want to. I mean, when you publish a short report, I mean, really, you're speaking to the long holders of that stock, and they want you to be wrong. They want to find excuses to disbelieve you. For me, the way to handle those situations, and we haven't done that many over the years, in which we're saying the technology doesn't work or the drug doesn't work, to look for behavior patterns on the part of the management. So if you look at the history of the CEO, the controlling shareholders, if there are problems in their history, whether it's with this particular company or other companies, then I think you can start to build a basis to infer that the scientist or scientists, ideally as the short activist, hopefully you're not going to just one technical expert, but you're going to multiple technical experts. And if you're finding more or less unanimity among those experts saying there's a problem with this, and you map that on top of what you think are real credibility issues of the people on the other side, then to me that seems like it's in the abstract. It seems like it's a valid short case because you've got valid reasons to say, yeah, this company is problematic. That scenario that I just outlined, I mean, how do you read that on your end?
Years back when Elon Musk had his plans to build a landing rocket, one of my engineer friends who was like deep into rocketry said, no way, never works. If I talk to other people, it is really, really, really hard to do. And somehow they managed to do it. So I did at the university philosophy of science. And one of the approaches there is this Bayesianism that you talk about. You never talk actually about facts or truth. You talk about degrees of believability or degrees of belief or the degrees of validity. Then you can try to build up some kind of measures, construct some measures where you say like, okay, let's talk about smoking. Is smoking bad or is smoking not bad? And then we have like 10 expert studies and 8 of them tell me smoking up is bad. Then I can kind of rate the experts. The one might be somehow has different incentives because the study is funded by this side and the other study is funded by the other side. And that's exactly the core argument why I want to do this MetaShort approach. These kind of meta studies are studies where you incorporate all kinds of available information, measure them, rank them by importance, validity, or whatever, and then try to come up with some kind of the best possible story. For example, in the case of a farmer short, the best possible story is like, okay, with a degree of belief of 80%, this product will not work how they explain it, or it will have much more risk when using it or something. This probabilistic approach on thinking about things, you can also just easily apply to whatever you do in the financial markets, because financial markets are also best explained probabilistically. There you can just say, okay, if my degree of belief is at 90%, my short bet or whatever bet I want to place is very different and with a very different risk management than when I do it with a degree of belief of 60%. But still, if you think it's 60%, it still can be a bet you should take, because if you have like 160%ers, then on the long run, you will converge to a profit, right?
That looks at a subset of short activist type research. To me, the bread and butter short activism research isn't forward looking. It's not usually trying to figure out whether a drug works or will work or technology will work. It's usually more, at least our approach is, you're looking backward. And the way I put it is, there are 3 questions that we're asking. Has the company accurately disclosed or explained material information? So, or another way of looking at it is, have there been lies of commission? Has the company disclosed all material information, especially that which could be adverse? So lies of omission. And the third is, does the market understand what the company has disclosed? If we can answer no to one of those 3 questions, and usually if you answer no, you're getting no to 2 to 3 of them. But if we can answer no to 3 of those questions, there might be something for us to do. What I try to emphasize when I talk to people, and this is the way that I've written most of our publications, is we're looking backward, and so we're saying, well, when they told you X, this was a misrepresentation, or maybe it was a lie. This is the truth here. They didn't tell you why, blah, blah, blah. And basically leave it to the market to try to extrapolate what they think this company is going to do in the future. Very little of what we do, I think, is forward-looking and is making arguments about the future. It's really arguing about the past. And so you were talking about degrees of probability or likeliness or probabilities of truthfulness. I mean, to me, and maybe look, because I wear the hat of a short activist, maybe your perspective and my perspective don't agree on this, but to me, a lot of this is factual. Like, if I write A happened, well, is that true or is it not true? Am I right or am I wrong? And so I'll write A, B, C, D, E in terms of facts. Therefore, our opinion or our conclusion based on these facts is X, Y, Z. Do you think that's a good approach, or would you still look at that and say, well, you're saying that these are facts, but I don't know that we can say black or white, this is true or not true. I'm still looking at it and putting probabilities on what you state are facts in the report.
Yeah, I tend to, which is also like a stance in the philosophy of science, which is not like a must do. It's like a position one can have or not have. And what you described is, I would model it in a sense with very high degrees of belief, because, for example, you can also have things like you look up a certain individual, you find out very incriminating details about this person, like online or with a detective or something. And even there, things can happen, like you mix up the name or something, which actually happened. But this is like, in some scenarios, you are to 99.9% right. But I think it's important to never, like in your thinking, close the doors for a certain proposition that this is true and cannot be changed. I mean, for example, in legal matters, it's just a little anecdote, but I saw a presentation from a lawyer who was just starting out. He had to defend as a free defender. I don't know how it's called in English. Like an homeless guy who was allegedly stealing in the shop, right? And the allegations were made by 3 employees from at the shop. And years later, he saw the same people again, and he found out that it's a common scheme that these guys just, if they find an easy victim, just steal the groceries. And and basically no one in the jury in this case was like on the defending side for this homeless guy. So it's just a little anecdote. It can be that something looks very, very, very much like something, but it isn't this. But it's perfectly fine to say, like, I'm sure with 99%, and I am willing to make a bet in the financial markets on this, because I believe on the long run this will play out in this way.
And I understand what you're saying, but to me it's still, these are binary questions, right? The short activist is either correct or they're not correct, right? So they either got the right person, or whose history they cited, or they got the wrong person. And mistakes can happen. There are situations in which I have read activist short reports, and it's either been accepted publicly that there have been some problems with the report, or there's a perception that there are certain problems. But a number of times I'll look at those reports that are controversial and maybe kind of lower quality, and I'll say, well, they got certain points wrong, but directionally they seem like they're correct. Meaning overall, there's problematic behavior by the company management, or problems with the accounts, but maybe they've identified the wrong issues. How often do you see reports that you think are probably directionally correct, but have issues with the construction of their arguments or the facts, versus reports that you think are likely directionally incorrect and just completely off base?
I would say most are rather correct than incorrect, and I would base this on the just the legal risk you face if you just make wrong allegations. This is kind of a incentive mechanism, I would say. So I mean, I have not seen, or I would say it's quite rare, the case that a flourishing, good, unproblematic business has faces allegations, but this happens as well. I mean, I remember a case years back on AMD. They were making like the CPU, the big computer CPUs, and they were on a oligopolistic race with Intel for years and decades. And Intel was always like the premium choice. AMD announced they had like a new kind of architecture, a new idea, and they believe this could be a hit in the market, and they could finally catch up or even be better than Intel in the markets. And there was some short allegations against AMD, and their product worked out wonderfully. And on the long run, they kind of the stock was a 10-bagger. The sales numbers are good, and I even had to test the product myself, so I'm fairly convinced that this is kind of one case where something like this happens.
What's interesting about that, and so I actually have a little bit of a front row seat to that one. So it was a cybersecurity vulnerability. So it was the AMD's new Ryzen processor. And the idea was, at that time, Intel had just had a major security vulnerability affecting pretty much all of its processors that had been discovered. And so the bull thesis on AMD at that moment was Intel's got this problem with vulnerability. AMD has this new Ryzen processor, so AMD is going to take server market share from Intel. And we evaluated the vulnerability that was cited. It was originally discovered by an Israeli cybersecurity firm called, I think, CTS. And we found that the vulnerability is real. To my recollection, there was no overstatement of the existence of the vulnerability, but where my jaw kind of hit the floor was, I believe that the activist who published this wrote, therefore we think AMD is a zero. And we knew this thesis, like we believe there's a cybersecurity vulnerability. We thought that if that really were known, that was a good counter argument to this view that, hey, they're going to steal or take all this market share from Intel because Intel's not secure. But I mean, never could I have, in good faith, thought that would take AMD down anywhere near to being a zero. So, so to me, that was an issue where, and it's tough, right? That's an opinion so I think the facts were largely correct. Like there's a vulnerability here, the exploit exists, blah, blah, blah. I mean, that was a really tough one. And I have to say, like, that got a lot of discussion at that time in the activist short community, because a lot of us were sitting there like, really? Like, and you could never prove that somebody I think it's very hard to prove somebody made a statement of opinion that wasn't in good faith. But I would say that's as close to a situation as I've seen where, as a short activist, I'm like, I don't know, man, like that's really at maybe even over the line. So I'm I maybe similar, view than, as to yours, but for me, I was fixated really on that opinion, that statement that it was therefore going to zero, which it obviously didn't.
No, it did not.
If it was an honestly held belief, it's an opinion and it just happened to be wrong. And look, I think for short activists as well and short sellers, since the global financial crisis, it's been really tough because things that that we think should matter, we find out post facto, after we point these out publicly, we find out that investors in some cases just don't care. They don't matter. I was speaking with a professor who's based here in Austin recently, and he's somebody I hope to actually interview as well. And so he's done research. He's done a lot of academic research into activist short selling. And one of the things that he found is that I think a pretty significant majority of the time that a short activist says, okay, we're short XYZ, it has whatever problems, that the stock goes down over the long term. So, and on an alpha basis, that's got to be real alpha, since the market, pretty much never goes down. But that the degrees by which it goes down are usually a decent bit smaller than what the short activist will say he or she thinks it's going to. And now I was a little surprised on one hand, because I feel like a lot of short activists don't put price targets on companies. We've occasionally done like valuations, where we're saying, okay, well, like in Group Casino, there were publicly traded securities. So we said, okay, if you add this up and subtract the debt at the parent level, and you throw a multiple of blah and parent EBITDA, this is what you get. It wasn't a target price, but it was kind of a sum of the parts valuation. But I was surprised. He said that a lot of short activists actually do put target prices on, and that in his impression is that they're directionally correct, but that there's a magnitude of overstatement in terms of the profundity of the short thesis, which, I'm curious as to your thoughts on that. I had an explanation or response that I gave that professor, but yeah, I'm curious as to what you think of that, and if that kind of jibes with your observations.
2 points on this. So the first is, yes, I agree price targets are fairly stupid. And I say it with emphasis with these words because, I mean, there's so much contingency in the market overall. If your price target is zero bankruptcy, okay, that might be a valid price target. But everything between I have a bearish view and zero is very unreasonable because your insight in the company is very limited. Even if you did some fair due diligence, and that's the reason why banking analysts have the habit to say like hold, sell, neutral, and that's it, right? Because everything else is hard to do. Usually they should even sell wholesale, neutral, in comparison to the market or in comparison to the industry index or whatever. And the second is I totally agree. What I usually say and what also I aim for this market, but usually like the more active fund managers and legal experts are more interested in what I do. But I aim actually for something like a pension fund, yeah, who has a very, very long investment horizon and a very low activity actually. They can profit most from short reporting and from MetaShort because they can increase their alpha by getting a bit lighter on the usual candidates in the short sphere. Because the easiest way to make money from short sellers due diligence is not going into the stock and it in comparison to betting on its decline, which is highly risky, as you know.
Right. Yeah. No. Definitely. And to emphasize that last point again, my view has been that when we speak, we're speaking to long investors. We're not speaking to people and saying, hey, you should short this, because that's a very individual decision. And very few people out there in the markets are equipped with the kind of risk management, discipline, and frankly, pipes that you need, in other words, institutional execution capability that you need to do this. But yeah, it's so. And what I was going to say is, in my view, when I heard that from this professor, said, well, look, the thing is, when you do what we do, we're very cynical, right? Like as short activists. I mean, to us, the notion that there's an efficient market, it's like, it's like, we think every tick of, almost every stock proves otherwise. But so I said, I think there's a tendency for us to basically overestimate the value that investors will put on our findings. Now, that's certainly not always the case. I mean, there's a stock we shorted a few years ago, NMC Health, that went to zero really quickly. That we didn't think was a zero. It just had a lot more fraud in it than we could imagine. As short activists, I mean, we really don't know, like, how is the market going to value these things? And that's why I hate answering that question. And I have to say, German media has been, they're really persistent in asking that question. So for example, several years ago when we shorted Ströing, we didn't put a target price or valuation on it. All we said is, hey, like, these are problems with the information that's been disclosed. We don't think this, the organic growth rate's accurate, blah, 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 blah. And I kept getting this question from reporters. Well, what's it worth? Like, I don't know. All I can tell you is that the information that they put out, we think is really misleading. So what's the real information? I don't know. And even if I knew the real information, you have to kind of be a psychologist, a mass psychologist, to say, well, with this new information, what's the valuation the market's going to put on it? Maybe this is most profoundly true, or it's most profoundly evidenced when we look at U.S. listed companies from China that have some degree of fraud. They're almost all structured as VIEs, variable interest entities, meaning that you as a long investor, you don't actually own the operating business. You own a company that has a series of contracts with it. Basically, you own a derivative of an operating business. And so people will say to me, for example, Tal Education, before it imploded, we showed that there had been fraud that had been committed. They faked a disposal and reacquisition of a business in order to take a gain on sale that wasn't really a sale and then lock it in. and they did something similar with another transaction. People ask me, what's it worth? I don't know. If you ask me my view, okay, what would I pay to own a derivative of an operating business who has a management that's actively lying to me? My answer is zero. But I recognize that there are a lot of people in the market who aren't that dogmatic and would say, well, you know, I'd pay something for that, for a derivative of an operating business whose management is lying to some degree that we can't determine. I'd pay something for that. I think that that's why, as a short activist, it's not a good idea to put target prices on. And if we do put target prices on, like, you know, it's like almost witchcraft. I mean, you know, how do you really figure this out?
Yeah, as I said, I totally agree. Price targets are not a good way to publish research results. But I mean, I think it is used as some kind of rhetoric, right? I mean, if you put out a price target, basically suggest to your readers a price target, but not actually make a forecast, right? So it's not about forecasting. But yeah, I would completely omit publishing any price target, because also it makes you look a bit silly to the sophisticated market participants. But I'm also not very skilled in influencing the not so sophisticated market participants, which is actually what you need to do if you speculate on short-term market activities. And I totally agree on, it's very, very hard to forecast what happens. If we look at GameStop and these kind of stories, it's kind of you cannot bet with arguments on this. So I also always say, like, try to create your alpha in a very long run, even if you're bearish on certain titles.
Yeah, and now the other thing that I think it's worth pointing out, and I will do this from time to time, I will refer to a company as a zero. That when I say that, I mean this thing like is valueless. You know, I've been doing this too long to believe that means it goes to zero or goes to zero anytime soon. You know, and I'm fond of joking that 700 million is the new zero, because there are companies out there that we know are zeros, you know, that there's just no value there, that trade for market caps north of 700 million. Or you could even look at like Lordstown and Nikola, you know, those have like $5 billion market caps. And, you know, maybe that's the new zero. But I mean, looking at Wirecard, I mean, there were people who said that out loud, that's a zero. And after they said it, it hit, I think, 33 billion euro peak market cap. GSX, a China-based fraud, which we published on, that thing hit north of 30 billion market cap, I think twice, after several of us had publicly come out and said this thing is valueless, it's substantially a fraud. And, you know, I think I even called it a king zero, you know, which, so I mean, like I even have to make up new terms to describe how shitty some of these frauds could be, you know, so invent this king zero nomenclature. You know, the funny thing, our view inside Muddy Waters of sell side target prices is that a lot of times it's backfilling. So if an analyst, you know, who's got to be, you know, bullish on the stock because his job basically depends on that, puts a price target of $20 on it, and when it's at 10 and it gets to 18, like the price gets raised to like 28, you know, and there's no real change. It's just they have to backfill to, you know, increase the target price to meet, you know, to be something that's higher, you know, it's significantly higher than the present, just because they want to maintain a buy. My favorite example of the corruption of this on the sell side was snap.com. So Morgan Stanley led the IPO, and as soon as they were able to publish research, the analysts came out and put, you know, whatever target price that was much higher than the IPO price and then current price of the stock. And he did it based on discounted free cash flow, which is like really a joke when you think about an early stage tech company like that you're expecting to do this. But putting that intellectual dishonesty to the side, he had his discounted free cash flow model, which yielded target price of whatever. But then he realized that he screwed up the taxes, and that actually taxes were going to kick in much sooner. And so it lowered like the year 4, year 5 cash flows and the terminal value, of course. So in order to avoid dropping the target price, he lowered the discount rate in order to come out to the same target price. And his explanation was, well, you know, the higher discount rate reflected unknown risks, and now the unknown risks are known. It was the tax thing. So now that we know, you know, we can pin the tax thing down more, it deserves a lower discount rate. And yeah, I mean, that's the magic of sell side target prices. You know, it was in stark display there. And I mean, to my mind, that's the sort of thing that I think SEC enforcement maybe could have even made a case on. Like, how can you say this in good faith? Because it was so out there publicly, and just the idea that you would lower the discount rate, you know, after you found a major error in your model, it, to me, is, you know, outlandish. But in any event, that's, you know, that's kind of the land of target prices.